Hemang Jani as well joining in on the show. Hemang, let's begin with your outlook on banks. The latest Morgan Stanley note is pretty positive on banks, saying that the balance sheet for these banks are a lot more stronger than what we've seen historically. And top picks include ICICI Bank as well as Axis Bank, along with Kotak Bank. Where is it that your preference lies within the banking arena, given that the recovery seems to have kicked in now?
Good morning. I think the banking sector has corrected quite a bit, from the top, almost about 10%, and it's driven by the slowdown in the consumption, and also the fact that the global interest rate scenario turned unfavorable, and past few days the entire banking crisis that came out in US and Europe. Our sense is that having corrected by 10% as far as bank nifty is concerned, and individual stocks would have corrected more, I think it surely presents a good buying opportunity, because we did an interaction with State Bank of India management. Mr. Dinesh Khara articulated very clearly that the credit cost guidance will not be more than 0.37. Also, the overall pickup in the infra side, in the overall corporate sector, growth is looking quite good. So we think that there is a good risk reward at this point of time. Our preferred picks are State Bank of India, Axis Bank, and within the smaller banks, we prefer something like a Federal Bank.
Interesting, and SBI clearly remains a top pick. But Hemang, what about the rest of the market? Has it fallen enough to be a buy on dips already, besides banks, which you just reiterated?
So Aisha, if you look at the Nifty, there is a fair degree of base formation around the 17,000 mark. The broader market, the mid cap and the small caps have also remained quite subdued for an extended period of time. So typically, when you see this kind of sentiment, it's a good time to kind of go out and buy some of the names in the broader market. Even if you look at some of the sectors like cement, where the raw material prices have dropped quite sharply, it presents a great opportunity. So our sense is that, barring maybe an IT, where because of the global overhang, people would not be very comfortable buying into it. But the domestic oriented sectors, be it banks, cement, to some extent consumption, surely is looking quite interesting at this point.
Okay. Well, in minutes from now, we'll get you one idea from Pankaj Pandey and one from even Neeraj Devan. But HGX is not participating in the same vein in which Asian markets today are really surging ahead. So HGX is actually looking quite dull. If I put things in context with what the Asian markets are, on average, Asian markets are up about 1.5% to 2%. Take China outside, it's not relevant. Hong Kong is relevant. Japan is relevant. So there is a bit of a underperformance, which I think HGX seems to be indicating. But I'm sticking my neck out and saying that I think we are reaching that zone where buy on rise strategy is not the great strategy now. Sell the rise is not a great strategy. It is now buy the decline. The markets are no longer looking that expensive. Earnings are not that bad. Crude prices have fallen. So the market narrative surely should change. Hemang, in last 10 days, what have been the top 3 purchases at your firm?
So Nikunj, apart from the some of the large cap names that we've touched upon on the banking side, if we talk about the mid cap space, we have been liking some of the footwear stocks. So Metro Brands has been something that we've been liking. APL Apollo Tubes, we've been liking for a long time. The stock has not corrected as much, but the numbers and the overall growth outlook is looking very strong. I think Indian Hotel is one stock that we've been liking for a long time. The outlook for next year on a higher base continues to look good. So we think that there is definitely going to be interesting pockets to look at when the markets have corrected, and you see some base formation. So surely we are looking at selectively buying into these names.
What has been the tone of activity last, let's say, 3, 4, 5 days, last 10 days? 3 top purchases which your clients have done?
So, Nikunj, is that question for
That's
me?
right. That's right. Hemang.
Yeah, so Nikunj, as I said, we have been liking some of the banking stocks, and particularly Axis Bank and State Bank of India are the two names where we have seen a fair bit of activity and some buying interest. Though the retail participation is on a lower side because of the kind of sentiment which is around us, but we do think that the smart money or the HNI money is slowly coming back into the market. Some of the cement names is where we have seen participation. So Ultratech and JK Lakshmi are the ones where we are seeing good amount of buying interest. Also, we think that something like Titan, which has corrected and is showing a fairly good resilience for the past few days, people are kind of going out and participating there as well.
Let's get in a view from our chartists on some of yesterday's interesting buzzers that stood out within the broader markets. You had a CSB Bank that really delivered, but it wasn't alone, of course. The entire banking space, as we said, was really active. BASF India held out quite smartly. Venky's India as well, 6.5% on that stock. India Mart was another smart mover. Kunal, let's get in a take. Any of these stocks that stand out according to you?
So I think out of the names, India Mart is something which stands out. The stock. So look at this way, the stock was almost at 9,500 odd in 2021 second half when the stock topped out. From there, the stock corrected towards 3,700, 3,750 mark, which means a correction of more than 50 to 60%. So initially, it was a sharp sell-off, and then the stock went into a time-wise correction from 3,700, which was actually hit in the month of September 2022. So over the last 6 months, 7 months, the stock has been consolidating at this 3,700 to 4,700 mark. Yesterday is where we saw the first signs emerging that the stock is confirming a swing breakout on the multi-week charts. Now that indicates that the trends have picked up for India Mart, and there could be a high possibility that the stock may gradually start into a strong trending phase, move up higher to say 6,000, 6,500, and then gradually rise up to zones of 7,000, 7,500 as well. So I think from a trending perspective, from a positional play, this looks very attractive at current levels. The other names which you mentioned, Venky's, the stock has been correcting very sharply, no major pickup in terms of price trend. So the selling is still continuing for the stock. Time-wise correction is what we'll be waiting out for before we initiate a buy. So would be the case with CSB, Bank, etc.
Okay, let's move on and get in some top fundamental stock picks then. And Pankaj Pandey and Neeraj Diwan share their bets.
Real estate, sentimentally, till the time interest rates do not come down, our sense is that probably this space may not really sort of do well. Our top pick in this space is Brigade Enterprises. I think this is one company which has very little leverage on the residential side and has been sort of doing very well both in terms of execution and also has got triggers in terms of monetization of the hotel properties as well. So I think that is our topic. But like I said, till the time we don't really get a sense that the interest rates are going to sort of soften from current levels, probably real estate, despite giving or delivering one of the highest sales in the last 8-9 odd years, may not do so well. A lot of other positives are also sort of panning out when you sort of look at the share of organized players. Now that is across 20%. So I think you have structural positives in place. I think what is required is probably the softening of the interest rates for this entire space to outperform.
Metals, as far as demand is concerned, is picking up. So there are some, initial moves that we saw in some metal names also. In fact, if you look at, besides ferrous metal, you see a non-ferrous or the stainless steel. Stainless steel anyway has been doing so well. If you look at the only company listed which is purely in stainless steel, as a Jindal Stainless, have been doing very well, and they're still seeing that demand is very strong. I think even the other non-ferrous names, whether it's Vedanta, so aluminum stocks, zinc, I think they also look very interesting. I think metals this year should do better than what they did last year. I think demand is picking up, and if the demand continues, because China opening up is also aiding to the demand. So if that continues, I think you will see a better performance this year than what we saw last year in metals.
All right, let's get a move on then. We've got lots lined up on the show, but let's take stock of some of the newsmakers in trade today. Greaves Cotton in focus as the promoters will be adding more stake from the open market. In fact, the promoter holding has marginally increased in the stock. But what's all the buzz about? My colleague Vinny is here to give us those details. Vinny, morning.
Absolutely. We are keeping an eye out on Greaves Cotton, and obviously, like we're talking about the promoters buying from the open market. And this has just happened in the last couple of days. When you look at it, there's increased buying coming in from the promoters just before actually the closing of the date in terms of buying shares, just before in terms of the earnings come out. So now look at the buying that has come in. 21st March, the promoters have bought 79 lakh shares. 17th March, also they bought 1 lakh shares. This is all through open market. While 16th March, also they bought 20 lakh shares. Now, as of December 2022, they were holding 55.54% stake. Post this continuous buying that we've seen coming in, they have bought 55.59% stake in the company. Now, that's the overall as of now. They're holding a small percentage increase, but not very often that we see promoters buying from the open market, and this is continuous buying that we've seen coming in the last 1 week. In terms of the price movement, also look at it in the last 1 week, the stock is up almost 2% as well. Let's look at the key triggers that come in for Greaves Cotton in terms of, obviously, there's going to be the main trigger is a transformational strategy that they have. There is a three-pronged strategy in terms of across their mobility space. Greaves Electric Mobility involved in selling E2W as well as electric two-wheeler, three-wheeler space as well. So that is a factor that we are keeping an eye out on. They're focusing on expanding that electric two-wheeler space as well, offerings over there in terms of various price points. That is going to be a key trigger for the company, as well as adequate capacity is in place to meet the demand as well. So these are going to be the key triggers that we'll be watching out for Greaves Cotton as well.
All right. Greaves Cotton 127. I mean, it's the entire EV play, which I think is doing fantastically well for them. Hemang Jani, if EV is a theme and EV is a real theme, what is the best way to bet on it?
So Nikunj, I think in terms of the auto sector, definitely Tata Motor is something that we've been liking. The stock has been a bit difficult for most of the people, but I think currently, apart from the kind of work that they've done on the EV side, most of their business lines are doing well. The JLR part, the domestic PV, the CV cycle is turning positive. Also, there is going to be a IPO of Tata Tele, which is going to add to about 25 to 30 rupees to their sum of parts. So I think from an EV perspective, Tata Motor is looking quite compelling.
What the global business, JLR, there is a slowdown in the world. China is in problem. Europe is in problem. How will they do well? 80% of the business is still JLR.
So Nikunj, if you look at the latest data points, their JLR portfolio has started doing much better, partly because of the slight improvement in the chip supply. The recent investor meet, the company is sounding extremely positive on their outlook across China, US, Europe. I think this, sentimental impact of, some sort of a slowdown is there, but we haven't really seen that reflect in their overall performance. And the margin part, we have seen some improvement. So, these are the times when you really, get to buy something which is having such a great franchise and at an attractive valuation. So from that perspective, Tata Motor looks quite compelling.
Tata Motors?
Yeah, it looks attractive.
You've not sold your shares which you own. But why does this kind of volatility does not deter you? You are a trend follower. So for a trend follower would say, I'm chasing the trend, good or bad, doesn't matter, but I'm a trend follower. Why this kind of volatility does not deteriorate you from selling?
No, because of course one of the major factors is that the buy price is much lower, so that's why there's a lot of buffer to the stock price. The other way to look out for is that the stock has not shown any major kind of volatility. Tata Motors is a stock which has actually been a V-shape stock, so it corrects very sharply, it rises up also very sharply. But this time around, the last 1 or 2 months specifically, the stock has not fallen very sharply. So I think 400 to 450 has been a broad range. So when a large cap, high beta stock remains in a confined 10% kind of a trading range, we expect that this is a time-wise as well as a price-wise consolidation. Now, the only trigger point for Tata Motors, I think, in terms of technical charts, is a breakout above that 450 mark. I think last couple of months back, the stock tried to come closer to that 440, 445 level, but it failed to break past about the 450 mark. So I would believe that a new trend could emerge only once the stock breaks past above the 450 levels. So for positional traders who are looking out for trends, I think they could probably enter about those levels. In terms of value buy, in terms of a level where the stock has found multiple supports, I think 400 and below, 385, 386 is a very strong support zone. Over the last 2 years, the stock has had entered into this territory, I think 3 or 4 times, and it's bounced off quite strongly from those levels. So there is a strong support zone sub 400 and resistance at 450 levels. The moment it crosses about those 450 levels, I believe new trends could emerge for Tata Motors.
Hemang, your thoughts on the Hindustan Zinc dividend in terms of helping Vedanta pay their debt while brokerages across the board are, slashing the rating and reducing the target price on both of these counters, that's Hindustan Zinc and Vedanta. Your views?
So I think if somebody is looking to buy a stock for dividend yield perspective, there are better options available. IOC, Nalco, those are the names where you will see a dividend yield of about 6 to 8%. I think Hindustan Zinc, after they pay out, do the payout, there is not going to be any meaningful cash left. Also, Vedanta surely has been a good dividend, paying company. But in the current scenario, we do not see any great, merit in buying into it. And I definitely think that, we should be focusing upon some of the other PSU companies which are giving you a 6 to 9% kind of a dividend yield.
Let's move on then, and keeping with management meets, you have SBI which held one, and the bank sees no significant challenge in the Indian banking system. Let's find out what are the other key takeaways, or what the other key takeaways are. My colleague Harsh joins in with that perspective. Harsh.
Well, yes. Now, in terms of loan growth, the loan growth has been quite elevated. 16 to 17% is what the system loan growth is currently at, and what SBI has guided for now going forward is that should come off to the 14 to 16% band. Now, with regard to margins, SBI continues to be positive on the margin front. They believe that the MCLR re-rating is still expected to continue into FY24, and therefore margins should continue to expand. So that's one positive coming through. They also believe that credit costs will continue to remain benign or they are targeting credit costs to continue to remain below the 50 bips mark, and they believe that they do not expect any challenges from the restructured book, as well as they continue to expect granular recoveries to come through, while the chunky ones they believe have already come through. With regard to YONO, they're quite positive. 30,000 plus accounts continue to be opened on a daily basis, very impressive. And they believe on the back of that digital push, cost ratios continue to get better and better going forward, and they continue to expect a few bips of improvement with regard to the cost to assets ratio. They also suggested that the goal was to reach the 1% ROA and 15% ROE mark by FY24. They've achieved some of those metrics already. The 1% ROA has been crossed, and they believe that they will achieve those numbers ahead of the FY24 guidance, either in Q1 FY24 or in Q4 FY23. So largely positive on multiple fronts, SBI.
Thanks very much, Harsh, for giving us those details. That's the view coming in on SBI and their management meet. In the meantime, just checking in on some of the other newsmakers in today's trading session, and we will be watching out for the likes of, apart from a Hindustan Zinc, there's going to be something like an LTI Mindtree, which has announced the latest product. Tata Motors, as we said, with respect to the increase of the commercial vehicles, there have been some approvals as well that have come through for Zydus Life, so keep an eye on all these counters in trade. But in the meantime, let's hear it out from Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors. She believes that the valuations of the banking sector are looking more attractive. Listen in.
We've had some serious dislocation, particularly in the US regional banks and the banking sector. Even the systemically important banks have seen their share prices completely collapse. And that might continue for some more time. But I think if the stock prices come down further, I also expect that, as Devina said, that the Fed may change its policy stance from being very tight on liquidity and on interest rates to being more back to a little bit more of an easier stance, and we may not see rate hikes, which markets might like. So if markets collapse further in terms of stock prices, particularly of the banking sector, and the valuations will become a little bit more attractive, and then markets will start looking ahead, um, potentially if the Fed rate hikes stall. So there could be, while it's going to be a very volatile environment, there will be trading opportunities, I think, in this environment to make money.
Kunal, is IT the only weak link in the market right now?
Yeah, I would say underperforming. It's not falling very sharply. Infosys is already at 1300, 1350 odd mark. TCS is the one which I think has started to correct in the last week or so because of the kind of news flow attached towards the stock price. The rest of the names, for example, I was looking at the mid-cap IT names. I think Persistent Systems, Redington, KPIT Tech, these stocks have done reasonably well for themselves. L&T Infotech, Mindtree, Coforge, L&T Technology Services, many of these stocks have actually gone a bit more sideways. So it's a bit of a different kind of an reaction as well as price action for many of these large cap, mid cap IT names, and that's what I think probably makes the sector trends a bit more unstable. And I think till the time we will see these kind of different and divergent price trends, we would expect that the IT index would remain to a range or a bit of volatile consolidation. I would believe that the bigger trends could emerge once the likes of TCS, Tech Mahindra, and probably even Infosys, if they start to show some signs of stability. Because if that happens, that's where I believe that a bigger turnaround could probably happen for these IT names.
All right, there you have it. That's the view coming in. Meantime, let's get in a view on the charts then, Naresh, as to what your outlook is on some of those OMCs. They've perked up of late. Are you seeing any sort of, Rudra, pardon me, any sort of follow through, Rudra, on the charts of HP, BP, IOC?
Definitely, it makes sense to enter these OMCs, and also I expect fundamentally the results to be good for the coming quarter. And specifically on chart, if I see, IOC is a good stock to buy, available also in F&O. And if I say the support zones of 78 are held multiple times, and if this stock can make a breakout above those levels of 82, stock can head towards 90 and even eventually 120. So even if I see stocks like BPCL and even Hind Petro looks very strong. In fact, BPCL is also a stock which has made that breakout above levels of around 353, 354 zone. And last 4 sessions, if you see, there has been a huge built up in open interest in F&O. Also, delivery based buying is clearly visible in BPCL. So for me, BPCL looks very strong, and this stock above levels of 353 is definitely headed towards 380, 400 zone. And IOC is also strong, and even the same chart patterns are visible with Hind Petro. So for me, in the order of preference, I will pick up BPCL first, and then IOC, and then Hind Petro. All three looks very, very strong, and breakout has been visible, available in F&O, and one can definitely build positional long for another quarter. These stocks can do very, very good.
Dow Jones ended higher yesterday, which equities were up and are up. Gold is down 2%, oil is up 2%. So pretty much a reverse of what we saw last week. And that is what you want to see. You want logic and stability. You don't want disjointed moves in the market, because when there are disjointed moves in the market, you start wondering that which way risk and which way volatility is moving. So it's a good handover from US markets. It's a good start for Asia this morning. I was hoping for almost a triple-digit gain on SGX, but let's see where markets open. Pre-open rates, I don't think anything large is expected. Don't go by the red. I think this will settle in. This has to settle in. It's not going to be a lot of red, at least in the initial bit. It's already settled. Nifty is up. Sensex is trading with a negative bias, but that I think should equalize going forward. You don't have any large themes which are clearly at play. And there is a bit of a churn which is there toward commodity consumers, HUL, Tata Consumer, Jubilant FoodWorks, Nestle. Hemang, these are expensive stocks. But there is a play here that commodity prices go down, palm oil prices go down, crude prices, they go down. Some of these companies would benefit.
Yeah, surely, Nikunj, I think having corrected almost about 12 to 15% from the top, and given that the underlying raw material prices, palm oil, crude, and many other items going down is surely a positive sign. Also, we are seeing a little bit of positive data points on the new crop which is going to come into the market. So I think consumption stocks do provide a good entry point. The only thing is that when the growth is not that great and the valuations are still on a higher side, there is no compelling case of buying. But typically, in this kind of a market, these stocks can give you a 10-15% kind of an uptick. So from that perspective, I think HUL and GCPL are the names which we think are very well placed.
Nikunj and I were just talking about, whether IT is a good buy on dips or perhaps, can you start nibbling in or not? But the debate really is that for, say, the next 5 years, where is it that you're going to generate alpha? And IT clearly can't be that sector, right? Even if it may be at the peak of the bad news.
So Aisha, 5-year view, I do not think people have, but what is coming out very clearly is that the mid-cap IT, which actually did very well, so the likes of Coforge or Persistent, Emphasis, I think that is where the valuation comfort is not there, and you have some possibility of business impact because of what is happening in terms of the banks. At the same time, the large IT names, be it Infosys, TCS, HCL Tech, there is certainly some amount of negative sentiment at this point. But we think that the valuation comfort is pretty much there. I do not see a material risk to the earnings, guidance which the companies have given out. So we would be definitely looking to buy into the correction which is there in TCS or Infosys at this point of time.
Coming in. Meantime, let's also find out what the outlook is on the entire infra basket. Naresh, just wanted to quickly get in a take from you as to where your preference lies within this space. CA Rudra. Apologies for that. Where your preference lies within this entire capital goods space, the fact that we have seen the likes of ABB, L&T, they clearly seem to be on a lot of market experts' radars. Yours too?
Yeah, for me, definitely L&T has just made that attempt and it is now trying to give breakout above levels of around 2,210. And if it can close decisively above those levels of 2,210, stock can head towards its all-time high levels of around 2,300 and a move even beyond that is possible. L&T for me definitely looks the strongest among all the counter, and risk reward at current levels also favor a good buy. If I have to also see the patterns of ABB on chart, again very similar patterns, and if this stock can close above levels of around 3,430, 3,440 zone, a fresh breakout will be definitely there, and stock can even head towards levels closer to 3,600, 3,800 zone. So for me, both ABB and L&T are very good buys. If you are a short-term technical trader and who wants that momentum to be there on the stock, then wait for these zones to get broken out and then trade fresh. Or definitely on every dips, stock can be bought, and trends are very positive both on L&T and ABB.
Kunal, what about your mid-cap ideas?
So I'll bet on Anantraj Industries. I think the stock has started to get into a very strong breakout mode, triangular pattern breakout, flag pattern breakout in the daily as well as in the weekly charts. And it's confirmed this breakout on the back of some extremely strong volumes, encouraging volumes over the last couple of days. So would suggest a buy. 130 was my previous target, so I've revised it hard to 134, and stop loss could be kept at 113.
Right. Rudra, very quickly, your mid-cap ideas?
For me, REC looks very strong and initially headed towards levels of 126, and even eventually stock can move towards levels of 135. Have a stop loss of 115 at current levels, and it's a great risk reward buy. For me, REC looks very strong.
Okay. Hemang, why are utilities going higher when interest rates are moving high? Utilities should be under pressure when interest rates are moving higher.
So Nikunj, one important aspect is the high dividend payout, because already the government is falling short of the divestment target. So there is an expectation that you will see a good dividend announcement being made for companies like IOC, NALCO, NTPC, Power Grid, etc. So that is where you are seeing some buying interest. Also the fact that something like MRPL, because of the way the crude prices have fallen, people do find some comfort that there is going to be some improvement in the standalone refiners profitability, and GRM trend is also positive. So which is why we are seeing some interest in the utility stroke PSU names.
the show. Thanks as always for taking the time out.